Okay, Grand Rising, can you not hear me? Can you not see me? Can you hear me? Can you see me?
Loud and clear.
Good, 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 good.
Grand Rising, no. Yeah,
Grand
we can see you.
Rising, Grand,
And,
Grand Rising,
Sunrising.
Grand Rising. Guys, I went on my first run today for 4 months. I hurt my back and I hurt my ankle about four and a half months ago. Today I went for my first run. If you know me, I run. Well, used to run every day. Yeah? I haven't run in ages since I injured myself. So today's a milestone. I just woke up and said, you know what? I've had enough of it. Let me try it. Let me go for it. And I made it. I made it there, made it back. I'm happy. I'm over the moon. All right. So let's go. It's Breakfast Club. It is Thursday and it is the 1st of February. It is the 1st of February, guys. Who can remember Christmas? Who can remember Christmas? I know someone that can remember Christmas like it was yesterday, or can remember New Year's like it was yesterday. All right. And it is the 1st of February, 1 month down. What does that mean? That means that time does wait for no one. Time is moving, guys. Yeah, so you have to be moving. You need to be ahead of time. Whatever your goals are, whatever your aspirations, your dreams, your plans, your business ideas, your plans for family, for life, for your health. It's no point saying, yeah, I'm going to start my diet next week. I'm going to go to the gym next week because it's a month down now. Yeah, you're a month in. Okay, so it's time to activate, guys. That first month, okay, you was getting over Christmas, you was getting over New Year's, etc., etc., etc. But right now, it's February the 1st, okay? So it is 100%, it is definitely time to activate, okay? You must activate. And that's what we're gonna do with our trading, guys. A lot of people are understanding. I put something in the group yesterday. And I said, show me where your entries were. Show me where they're going to be. Nobody showed me. I don't know. It's not for my benefit. I know my entry. All right. So for the people who don't know their entry, I wasn't able to. I know I never got time. I hear you. Time don't wait for nobody. All right. Whilst you're fraffing about whatever else you was doing, somebody else was doing the homework. Somebody else was doing the work. All right. Let's go. Is there a particular pair that somebody wants me to look at for us to break down this morning so we can understand the strategy, understand how to get in, understand how to get out? Have a look at this, for example. I'm going to show you something, all right? Have a look at this. No, I'm not going to bother. Yeah, so any pair that somebody wants to break down, let me know. Let me know. Any pair that somebody wants to break.
Euro JPY.
Euro JPY. Good morning, Tamara. Tamara with the sexy pics. Yes, we see that. Yes, Tam. Tam's doing photo shoot out in location. I see. All right, so this here is our Euro JPY that Tam wants to look at. Guys, please, I want my music to be really background. So if it's too loud or it's annoying, let me know. I will turn it off. All right. So if you can see here, in fact, let me get rid of that. It's a bit. Let me try and get something a little bit calmer. Yeah, just to say some, this is got something a little bit calm. There you go. I see it. Let me do that. And then we're going to break down Euro JPY to the point where Tam's going to know exactly what she's looking for today. She's going to get a great entry today and she's going to make loads of money. Yeah. All right, cool. We're going to do that. So this is Euro JPY. I'm echoing as well, so let's fix that. Give me a second. There you go. So this is Euro JPY. We know that the first thing we do when we come to any market is going to be our Russian doll theory, meaning that we want to start off and understand what the bigger picture is, okay? We want to go all the way out. We want to zoom out and understand what has been happening with this market. Look, soon I was here, for example. Can you see this? I was just here. I was on a daily and I was looking at this, okay? But as soon as I really zoom out, so this just looks like the market's been just going bullish. Maybe it's going to continue going to space, right? But as soon as I zoom out some more, I see the weekly now, I'm thinking to myself, that's what I'm thinking. That is what I'm thinking as soon as I zoom out. I'm thinking to myself, right, this Euro JPY has been trading within this box. Could we all agree with that? I think we can all agree that on a much bigger time frame, that Euro JPY has been doing the hokey cokey, yeah, from here down to here, and it's back up at the top of that range. Now, let's understand some basics. You ready? As soon as I draw this with this tool, you should know what I'm gonna say. From the top of any range, what are we thinking? From the top of any range, what are we thinking?
Sell territory.
From the bottom of any range, we're thinking buy territory, okay? Now, that doesn't mean enough to say, okay, we're done with Euro JPY, now we're going to buy it, or we're gonna sell, and we're gonna, we move on to the next one. No. This is just generally the attitude that we take to trading within a range, and the market's been within this range. Now, that doesn't mean that the market might decide today, or tomorrow, or whenever it is, that it's had enough of this range, and wants to do that. Doesn't mean that that's not gonna happen. And remember, the first thing we know about the markets is that we don't know what the markets are gonna go and do. They can do whatever they wanna do. But what I've seen by simply zooming out is that this market has been trading within a range. Let me draw some lines now. First line I'm going to draw is like this. Second line I'm going to draw is this acceleration of this impulse here, like so. So if I wanted to put a top end on this, maybe it would look like this. Am I making sense? Does anybody need me to have any questions about what I've done so far? Does anybody have any questions about what I've done so far? Could be the silliest question, could be a complicated question. Does anybody have a question about what I've just done? Good, that means everybody can do it, okay? Because what I did is I drew some bottom end lines in here, and I don't come and draw a separate top end. I hold control and I pull out a parallel line, because this is just a guide to show me the energy of what the price is doing, what the market's doing. Okay, it's just a guide. And if you can see down here, was the same. I made a bottom edge, and then I pulled out a parallel line. It's exactly parallel to this edge. And we can see that the market's been trading within that little impulse in here. Let's zoom down to our daily time frame now, see what's happening. Now, we understand that from what Brother Alan spoke about the other day, about the Japanese interest rate decision, and the fact that that Japanese currency might be gaining some strength, all right? And if that is the case, then it's in the right place in regards to this range to gain some strength and start making this market start falling, because we are at the top or near the top third of this range, okay? And now I've gone to my daily time frame. I can make these a little bit neater, because when I was on a weekly, it's a bit more difficult. So let's do that maybe, okay? So we can see that the market, if I zoom in here, all right, we can see that the market has been making higher highs and higher lows. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, okay? And we're here at the moment, okay? Now, what I want to do is I want to understand something. First things first, is this JP saying, yeah? The market will continue to do what it has always done forever and ever and ever until it decides to do something else. All right. So I'm making the assumption right now that this market is going to continue trading within this yellow range until it shows me differently. Does that make sense? Does that make sense that can you guys see the screen? On my thing it says preparing live stream for some reason. Can you not see the screen?
Yep.
Okay, good. If anything happens, just let me know, all right? So I'm making an assumption that this market wants to continue trading within this yellow range. So maybe even here, look, we ain't quite at the top of that range yet. And don't get it twisted, from where we are to all the way up in the top of this range is loads of pips, okay? Now, why might it go up here? It's gone up there before. Let's have a look in the past. Yeah? In the past, it's gone all the way up here. And we can see, if I go to my weekly for argument's sake, we can see some potential reasons why that market might continue to go up there. All right? So the potential reasons we can see, because I'm on the weekly, by the way, is we can see these weekly imbalances. Let me try and see if I can quickly go on the monthly, see a bigger one, just so I can block it out. All right, so look, have a look. On the monthly, we can see these imbalances. I can make them one big imbalance, but I'm going to draw them as separate ones, and then we can zoom into them, all right? So I'm going to make this an imbalance here. I'm going to put monthly. Yeah, an inefficiency in the market. Some inefficiency in here, some inefficiency, in here, but we've already, prices higher than that at the moment. So I can squeeze this one up, all right? we can squeeze this one up. Prices are already higher than that. How do I know that? That little red dotted line is where price is, all right? So we can get rid of this one. That bit of imbalance has been closed up. We still got this big imbalance up here on the monthly, all right? Let's see it, see where we are, look. See? We still got this imbalance here in the monthly. Let's scoot this up. We've actually wicked all the way into here. And wait a minute, now I might change my tune, all right? So the market has wicked up and closed the majority of that imbalance, okay? It has wicked up and closed the majority of that monthly imbalance, all right? I'm allowed to change my mind, that's how it goes, all right? It's wicked up and closed the majority of that imbalance. Let me go to my weekly and see what's left, okay? Not much left, not much left at all. You can see some smaller little weekly imbalance in here, but I'm thinking there's a very high possibility, especially with the fundamental information that we have about this Japanese yen moving the interest rate and potential strength in the yen. I'm thinking to myself, maybe this market may, based upon us being at the top of the range, based upon the fact that it's closed that imbalance, may be wanting to turn around now. May do. But at the same time, it may decide it wants to come, and before it makes its journey, it might grab some liquidity. I don't know. All right. So let's go and scoot all the way over and see what's going on. So we can see a little leftover monthly imbalance in here, little leftovers. And then we can see that weekly imbalance still sitting in there. And you know what I'm going to do, just so I know exactly where the top end of that range is, I'm going to put a little line like this going across, which is where that liquidity, the liquidity, does anyone not know what liquidity is? I know once upon a time you didn't know, and it was just a big word that you used to hear, but does anybody not know? It's not clear exactly what liquidity is. Good. You lot already you already got a C grade. All right, you're already passing at the moment. So nobody's telling around and saying to me they don't know some stuff, and it's all right to not know. Yeah, it's better you don't know and you ask than you don't know and you don't ask. So that makes you stupid. Yeah, because you've got an opportunity to learn. All right, so we've come up here, we've closed this imbalance all the way up into here. There's left a little bit of monthly and we see a little bit of weekly space over here, but we are still trading within that range. But we have broken structure on a weekly. Have a look. This was some minor structure that's been broken. Push down here, came back up here, closed the imbalance. Let me zoom in so you can see Wagwan, all right? If I was to rewind this, you'd see and it'd be a lot clearer, all right? Understanding our strategy, understanding how to read market structure and price action. Have a look. The market came up here, closed imbalance, all right? Then pushed in the opposite direction all the way down to this level. Now it is a wick on a weekly, but believe me, trust me, on a smaller time frame, this candle came all the way down here. But when it came down, it realized, wait a minute, I left some inefficiency, some imbalance here in the market. Let's click it forward. Look, this candle came up here, and then it was like, what about all this imbalance? Are you not going to go back for this monies? Are you not going to let these participants get in the market that was waiting here to enter the market at this price? Are you not going to retrace and go back there? Yeah, we are. So the market came back, closed that imbalance, and then has started to continue its journey. Now, at the moment, we do not know whether or not this market has come up here. Remember ping pong? Whether the market has pinged, ponged, pinged, and this is just part of its pong back up here. We do not know that yet. Or we don't know whether the market is now deciding, because it's closed this imbalance, it's broken some little minor structure here, that we're going to break outside of the range and start doing this. We do not know. If somebody out there knows, they should let me know. We don't know. All right, let's go to our daily time frame to see what's going on. On our daily time frame, we saw how the market came pushed down here, had a little bit of sideways action in here, a little bit of sideways action. Have a look. If I was to draw a box, the market was kind of a little bit in here, you know, kind of not making a real decision. All right, ever so slight higher highs, but kind of not definitive. All right, in here. And then the market, you know, made an indication, made a correction, made a continuation, pushed up here, closed some imbalance. Look over here from a structural level over here. Look, this was a level of interest before. The market couldn't get past here. The market sat on it before, then the market broke past it quite aggressively. So like as we've seen on the higher time frame, going back to our Russian doll theory, we can see that this retracement back here was to close up the imbalance that was made by all of these red candles. Have I lost somebody? I've lost somebody, I know I have. Let's go back. Weekly, we saw this big push down here, boom. This is the bigger weekly structure. And if you want to go there, we could say monthly structure. Let's say weekly structure. Big weekly structure pushed down that caused inefficiencies in the market. So therefore, when we go to our daily time frame, we see all this bullish action. This bullish action was actually coming up to close this bigger inefficiency in the market on the weekly. All of these candles here, all this little movement. So even if I got into this trade somehow, because I understand the bigger picture, as soon as I saw that imbalance close, I'd be concerned. I'd be trying to take my money. All right. Now we've seen the market come up here, close that imbalance. And when it closed that imbalance, this became structure here and here. Because if I was drawing my lines in, let me delete some stuff. Delete this. If I was drawing my lines in as Shakir knows from his last session, I would have drawn it like this. Because I would have had to have touched that last low before this highest point. Okay, that's what I would have done. But we can see that this market has actually broken this low. Broken this low. Look, smash bang wallop. Broken this low. On the bit, it seems to me, the kind of hint is given to me that maybe this market may want to start going in this direction. Because we saw this big push on a larger time frame, and we saw it come up here, close imbalance, and now we're seeing it break in structure. Now it may, I haven't got full confirmation yet, because what if it doesn't come and break this structure down here, then maybe the market just wants to do this. Come down here, just wants to do that, and go back up to where it was going to, ping-ponging within that yellow range. I don't know. I wish I knew. I don't know. Yeah, but I have these concepts, these ideas in my head of what it may do. So we've seen on a daily time frame now structure being broken. Boom, boom, boom. Let's drop our time frame down. Let's zoom in. I'm on the 4 hour. Have a look on the 4 hour. The market, if I was drawing these lines on a 4 hour, I would have had to touch this point here as this market accelerated up here, and that would give me some of my structure. Here, look. Yeah, obviously this market's been quite wicky on the 4 hour time frame. I haven't got a close outside of this 4 hour time frame. I've got lots of wicks, so I would have had to drop down my time frame if I wanted to get a better entry, because these wicks are not confirmation. I want to see closes. But we've seen this market coming down, and here with structure that we've seen structure breaking, and here is structure. Now we've definitely seen right at this point where there's actual structure over here, a close below that level. We actually saw a little retracement also in here, yeah? And then we've seen the market to close and continue in this direction. Now, two things may happen. Because we've broken this level here, and we understand when we break these levels here is a level of liquidity, because we closed and we broke. We closed and we broke below this level here, where there was liquidity. Here, boom. This was the close that broke below this level. And we had a little run back. And then we came and broke another level. Boom. And this is another level of liquidity, which right now what may happen is it may decide we want to run back a little piece, because I can still see some unfilled imbalance in here. So we may see this happen before this market decides to continue coming down in this direction, because it's suggesting like it wants to be bearish, but we don't know whether or not that bearish suggestion means it wants to come and break all the way down below this level down here. Don't know that at the moment, because it's still trading within this yellow range. Everybody's still wearing baggy jeans. Yeah, this is still, oops, let's click that. This is still the vibe. Yeah, that yellow range is still the vibe until it's not the vibe. All right, and that vibe is we are bullish trading within that yellow range. You see it? So I don't know, just because I've seen this little action happening here, I don't know that now the market's going to come and fall to hell over here. I do not know that. I wish I knew that. I don't know. Okay. All right. Let's go and knuckle in, see what may or may not happen. All right. So I'm looking here to my left because I can't look to my right, but I can. but I won't see anything apart from, fresh air. There's no point looking up. There's nothing up. There's nothing down. I can only look left to what's happened before for information, for data, historic data. These bits of data are not my opinion. These are facts. These happen. That the market went like that. Higher high, higher low, higher high, higher low. These are facts. Swing lows, swing lows, swing lows. These are facts. These are not my opinion. Okay? So this is the only place I can look for data. And we've just taken this liquidity and broke this level. And I'm concerned that we may push back up before continuing. It's possible. Because even if this market decides to push back up back to this line here, to the top end of this range, it will still, because it will do it over time, all right? It will do it over time. Have a look at time. It would still make a lower high. Do you understand? That was me trying to go up and down, but it wasn't too good, all right? It would still make a lower high and then decide to come down here and do something nuts, okay? So that is what my concern, but I don't know it wants to do it because at the same time I'm saying that, you might just see this drop off a cliff right now and do that. Maybe, I don't know. But what I can do is I can try and read these candles to see when it's going to give me an indication of what it wants to do. All right. So I could draw a line. I'm going to drop my time frame down, but I can do it here. This is a line of the acceleration of that market. That market accelerated in that direction. Okay. From this high, touching the top of those candles here, but it's very difficult to see because I'm on the 4 hour. So what I need to do is I need to zoom in. Pow! That's me zooming in. And as Shakir knows and everybody else knows that we have to touch this last high before this lowest point. I can see some stuff going on in here. I can see some sideways action, etc. Let's zoom in. Let's have a look at some of that sideways action. All right. The market was in here. Okay. Let me drop my time frame down to my 15 minutes. Now we can see this sideways action. Before we weren't too sure. There's someone here that didn't see this when we was here on the 4 hour or the 1 hour. I can see straight away that market started moving sideways at some point. And your eye has to be able to understand and see that immediately. All right? Because on a smaller time frame, it looks pretty clear on a 5 minute. It's gonna look even 15 minutes. It's gonna look even clearer on a 5 minute. Because this market was kind of fraffing about in here. Did a little bit of fraff in here, grabbed a little bit of liquidity. All right? Started coming back down in here, decided, I want to do some more fraff in here. And maybe, Alan will tell us, maybe that was because of all of these decisions, these interest rate stuff, maybe some other stuff going on. Who knows? Who knows what kind of factors there was reported? But I know when I'm looking at this from a technical perspective, I can see these pockets of consolidation, which for me, present an opportunity. What is that opportunity, guys, looking here in, for example, that last bit of consolidation that I've just drawn around? What is that opportunity? Somebody knows. Somebody knows about what that opportunity is looking at this little red box that I just drew. No, but I'm going to mute it because maybe the house music is sending man lala. So what is that opportunity? That we see this consolidation and we're watching it. And what is the opportunity? What is it that we're waiting for?
Waiting for a break, either way.
That's right. But talk to me how I want to be spoken to in regards to our strategy, Art.
Yeah, basically you're waiting for an indication.
That's right.
A break of structure, indication, then correction, and then what's the other bit? ICC.
You've got it. Go for it. You've got it. So tip of your tongue. Indication, correction, then.
And
I'm gonna help.
I remember.
No, I'm not gonna leave you like that. I'm gonna leave my fallen soldier. Go on. It's like this. I'm helping.
I've written that down so many times. Continuation. That's it. Yeah.
All right. So have a look at it. Let's look at it on the 5 minute time frame. When Jay comes to this market at 3 o'clock in the morning, because I can't sleep for some reason. Yeah, I'm just up 3, 4, 5 in the morning. All right, and I'm just looking at it, and I see this here all the way to 6:55 this morning. When I was up, going for my run, and I look at this market, I'm waiting for my indication of what it wants to do. Boom! Is that an indication? Looks like one to me. Looks like, Jay, you know what? I think we might want to go down. I said, okay, no problem. I'm not rushing it because look, if I was to go back in hindsight, which is a beautiful thing, okay, when that indication happened, I can't just rush it like the novice traders, like the other educators that are out there telling you, yeah, man, we're just gonna, when you see it break, we're gonna just go. No, I understand that the market moves in certain ways. I understand unity strategy. I understand imbalance. I understand the fact that the market likes to correct, doesn't like to leave imbalances. So I must wait for a correction. All right, I must wait for a correction. And have a look at the market correct. Closing the, and in fact, let me draw the imbalance in if somebody didn't know where the imbalance was. The market pushed down here, created imbalance in here. Guys, this is £1 million worth of gain. I'm telling you. All right. The market comes and must close that imbalance. Even if you're itching, you're like, oh my gosh, I've missed the move. Because let me tell you something, this red candle could be massive. Don't get twisted. This one is quite big. It's quite a strong candle, but it could have been bigger. And you're like, oh my gosh, I missed it. I've been waiting all morning. Well, that's what it is. If you miss it, you miss it. There'll be another bus. But if you understand the strategy, you stay patient, like, yeah, it'll come back. And watch it come back. Boom. Watch it come back. Let me move this out of the way. Boom. Watch it come back. If I was, if you was a little person standing on the platform, you'd hear, imbalance has officially been closed. That's what you hear over the tannoy. Yeah? You hear, imbalance has been officially closed. Now, at that point in time, you're waiting to see, was it actually closing this imbalance? Or was that just a liquidity grab and this market wants to go and do something else? So you're now waiting for your next part, which is your continuation. Looks like a continuation to me. And this candle closed over here. That would have been my entry on this 5-minute time frame. My stop would have been above this high, aggressive stop. A more lower risk stop might have been above this high, but I wouldn't bother because in my opinion, if the market starts coming up here past 50% of this imbalance, of this consolidation, it wants to go up. And there's all of this liquidity sitting above these levels. In my opinion, you placing your stop here, you just increasing your risk for no reason. You might as well get in here with your stop above here and get stopped out early. Get stopped out at that 50% level. Okay, it's doing something else. So that would have been my entry. That would have been my stop, 20 pips. Yeah? And I want to show you something before I hit the play button because we know what happens. I'm going to show you how I would have gotten in, or no. Should I even bother? This is a great trade. This is where you guys end. These are the trades you take at 5-minute time frame. When you get more comfortable with the strategy and you are more comfortable with understanding, seeing microstructure, things happen, etc., my entry would have possibly been up here. Maybe. Let's see. Let's see if it gives me the information. Because I'm on a 5-minute time frame, and I know that when the market corrects, it's going to do it all over again up here. Indicate, correct, and continue up in here. I don't think it's going to give me the information because it is quite small. This move is quite quick. But let's check. I dropped to my 1-minute time frame. Let's have a look. So I'm gonna be in here. I'm gonna see this correction happening. Here we've got these relative equal highs over here. I want to draw the line like this. Yeah, making sure I touch that little last point. This last point is here. All right. The market came up down in here. Or if you really wanted to say the last point was here, could do. Doesn't matter. All right. But have a look. When that market, if you're taking the first one, closes below that point, indication, pulls up here, correction, closes back down below that point, continuation, that could have been your aggressive entry on a 1-minute time frame. Even if you wanted to take this level here, have a look. When the market closes down below that level, corrects and closes the imbalance, and then closes down below over here, that could have been your entry down there, but I'm not going to move it there. I'm going to leave it here. So now, instead of that being 20 pip entry, 7.6 pip entry. Am I dramatic? Sorry. Yeah, I'm gonna have to give you that energy in the morning. I'm sorry. It's what it is. If you don't like it, go to the other educator. This just sounds like he's just they put him in that he's dead. Just warmed him up a little piece. Yeah. Have a look. Let's play. Boom. Delicious. All right. Because at the point this market's pushed down into these levels here, have a look. On my aggressive entries, a 1 to 5. When am I going to get out of this trade? Somebody's asking me, Jay, okay, you got your 1 to 5. When am I going to get out? Watch. I'm drawing my line down here. It's either two scenarios. I'm either happy with my 1 to 5. I'm going to take my money. That's the point. When it gets down here, nam, 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 I'm taking my money. Walking off into the sunset because I've won. Because I understand when I've won. Yeah? So I've won. I've got 1 to 5. I gave you 100 quid. You gave me back 500 plus the 100 quid. Yeah? So have a look. Alternatively, I understand that this is structure on that 1 minute time frame. The market's trading within here and here. If I see that market break here, make a retracement, close back above, I've had enough. Also, at a 1 to 5, I would have most definitely already moved my stop loss, okay, and made sure that I secured in some monies. So whether I made that risk-free or if I decided to at least secure in a 1 to 1 or 1 to 2, whatever it may be, I would have done that. Because at 1 to 5, guys, you have to understand again, what is the aim of the game? The aim of the game is to take money out the markets. Yeah, so personally, I think at 1 to 5, you should, especially 1 second, we haven't even looked left to see where this market has gone to, because we have to be able to look left to understand whether this market has captured liquidity, hit a massive order block, done something. And we only need to go and have a look, see what happened. Let's go and look. I'm looking at that white line on a 1 minute time frame. Maybe this market's going to show me something anytime soon. No, let's drop our time frame to 5 minutes. Let's have a look where we've gone. So only bit of information I have is historic information looking back. So the market came in here and tapped into a little bit of imbalance that was sitting here on a 5 minute time frame. Okay. Close that imbalance. Let's have a look a bit further back. And had a little retracement. Personally, my gut is that it still wants to come down some more. All right. Yes, it closed the imbalance, which will make it have a little reaction, but my gut is we'll have that little reaction and keep coming down some more. Yeah, that's my gut, my experience. But I'm sorry, I just missed something. I want to go back. What? Sorry, as it was moving away. But at the same time, I'm going to say something else. I would take my money potentially because I'm at a 1 to 5 because the market just came and captured liquidity from below here. All right. So do I want to be involved in that run back all the way back up into here? Probably not. I don't want to necessarily be involved in that. So 1 to 5 is a fantastic trade. Take your money. Or at least move your stop loss. If I could rewind a little bit. Where's the rewind? We get all the way down there. We've just captured liquidity. Okay. I'm at a 1 to 4. And I'm over the moon, and it's coming down some more, and I move my stop loss here, and I'm like, bruv, I'm at a 1 to 4.5. I'm over the moon about that. If it kicks back and stops me at 1 to 4.5, so be it. Yeah, if it doesn't and it falls for 1 to 20, the Lord was looking at me and fantastic. But there's no problem with you squeezing up. Now, how do you squeeze up these stop losses? I would advise, if you're somebody who you're happy with your profits, but you want to squeeze up these stops, you want to try and squeeze them above little levels of structure. Because you're basically saying, I don't have a problem getting stopped up. I just want to, at least have some skin in the game to say that I'm going to keep on. If the market goes in the right direction, I'm going to keep on going. All right. So let's imagine instead of you just going and squeezing it up right on top of price down here, yeah, you could say, you know what? I'm going to drop my time. If you have the ability to drop down into seconds, it's down to you. All right. I mean, that's down to what a subscription you have with TradingView. Okay. But put your stop above some sort of form of structure. So you might have come all the way down here and you see a little high over here, put your stop there. Yeah. Or turn when you would have said, I'm going to put my stop over another little bit of structure. But for argument's sake, here, you put your stop here, no problem. It stopped you out for 1 to 4.5. Who gives a damn? Fantastic, tremendous trade. Meaning, if you had risked 1,000 quid, you just made 4.5 grand. Foul, that's a tremendous trade. Okay. Now we're watching the market. I'm on a 15-second time frame, and have a look how our strategy works on every time frame. Somebody here has never even seen the 15-second time frame because they don't have it on their trading view. All right, but I'm just letting you know that though it's a lot noisier, a lot faster, and a lot more prone to fundamental news just blowing the structure out of the window. This is why you're not advised to be anywhere near the 1 minute time frame, let alone down here. I'm just showing you. All right, let's hit play. We've got our little line in here, touching the last high before the lowest point. We see the market do what? Indication. And then the market do what? Correction. And then the market do what? Continuation. Now, we don't know where this market might want to continue to, especially if it's the energy that it wants to be bearish. There's no need for you to be in this. If I was looking at this on this small time frame, I zoomed in that much to see the structure. There is no need for me to still be in this trade. Let me take my money. Let me take my money. All right. It doesn't matter if the market comes back down here. It does not matter. Yeah. The point is, it's showing you something, and you are reading the candles. It's like you're watching a film. What's happened in the film is that right about now, it's a romantic comedy, and that's what you've been watching. The fact that in the next 5 minutes it's going to turn into some sort of horror is none of your business. You don't know that. If somebody asked you what's that film about, you say it's a romantic comedy until you got an hour in and then the market did something else. You can only go by the information you have. So by this information, when the market went like this, and went like this, I'm out. It's saying to me that it wants to go up. I do not care if afterwards it comes and does this. I'm not getting back in straight away, like, oh my gosh, I made a mistake. Not until it shows me that it's going to indicate correct and continue in the opposite direction. And even then, I'd be like, yeah, market looks like it's going sideways in here. Because look, it came all the way back down here, even wicked below that little level here just to take the piss. And then look at it, it went all the way up here. I wouldn't want to be in that trade now. Now my 1 to 5 trade is looking like a 1 to 1, a 1 to 2. I don't want to be in that. So it's the same. I'm on a 15-second time frame, and we see our strategy playing out again and again and again. Because why? Not because Jay's come up with this strategy of all strategies, because I'm a genius. I mean, I'd love if you want to give me the title. Probably think I am a genius, to be fair. All right. But it's not. It's because this is the foundations of trading. It's market structure, it's price action, it's patience, it's risk management, it's understanding the overall direction of the market. This isn't some new magic thing that I've whipped up. Oh yeah, but guys, basically I know what's happening, in the world and what's happening at this time, and that it's nothing to do with that. Maybe those other strategies, that's what they're saying. They know at this time this happens, and that time something else happens. I'm happy for them. If they do, I hope that they go on to become quazillionaires, yeah, and help the unfortunate people in the world. Yeah, I hope that your ICT boss, educators, and you're this person and that person that knows everything, about exactly what time the market's going to do something and how it does. I hope that they've amounted so much money that they are now out there helping the small countries of the world with poverty and sickness and disease. But I get a niggling feeling they're not. I get a niggling feeling that they're not quazillionaires. Because nobody knows what's happening in these markets. The only thing you can do is try and be like a little thief in the night to read the candles and be able to get in and out and take your money out of the markets. That's it. It's that simple. I'm not preoccupying myself with the other fruff, because there comes a point when you've got to say, okay, I've learned enough, I'm ready. There comes a point, you're a boxer, you're training, you have to get in the ring. Do you understand what I'm saying? You have to get in the ring and start getting punches to the mouth and practicing slipping the punches, practicing blocking, practicing your jab. Because if you come to the conclusion that, wait a minute, this is enough. This is enough for me. Like most boxers can't even jab for the duration of a fight. They have a really poor jab. Think about some of your great boxers. Their jab's amazing. Your Floyd Mayweather, his jab is amazing and consistent. Whoever you want to say, their jabs, that's the basics of boxing, jab. You can win your fight with a jab. You can knock a man out with a jab. Yes, you can learn, all types of mad techniques and blah, 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 and blur this technique, yes, you can, but let's at least be able to say, I understand the basics. I understand how to read these candles. I understand how I can get in, how I can get out. And then I'm going to work on my risk management and my psychology, which, like I've said 20 times, is more of a challenge to overcome than this. Yeah. And we will work on market psychology, and we will work exclusively on risk management and how to scale in and how to scale out of positions, etc. This is the basics. All right. So cool, no problem. Let's go to current time. I'm gonna hit this, close it. Current time. So EJ, question to or information to Tam, who said let's look at EJ in the first place. In my opinion. This market, let's zoom out if I can't remember. This market is trading down within this range. So it's trading up within bullish within this bigger yellow range. We've seen it come to the bottom of that range, which is buy territory, and push up, but only push up to a 50% retracement of this impulse approximately. I can see it with my eye. Let's check it. No, I'm wrong. It pushed all the way up to the golden zone, okay, which is over here. All right. Golden zone is between that 618 and 786 on our Fibonacci's. All right. I'm not a Fibonacci fiend, but I do use my Fibonacci to look where 50% is and to understand if the market tapped into the golden zone. Tapped into the golden zone, and we started to break structure even on the daily time frame bearishly. All right. Some minor structure has been broken bearishly. Yeah, it's broken this level of structure, which would have been one of the points touching on our impulse line here bearishly. Now, after that break of structure bearishly, I'm always concerned that the market may decide to run in the opposite direction. And it's got a reason to run in this opposite direction, which is this imbalance over here. Yeah, it's got a reason to potentially say, I've grabbed that liquidity, let me push back up in here, and then I'm going to go to hell. It's got a reason to do that. All right. On a 1 hour time frame, we've seen this market continue making lower lows, lower highs, and lower lows out of a consolidation, made a little push here. If I was to put a bottom end of this range in, it will look like so. And we might see this market accelerate, especially if we evaluate our news. And we also can have a little browse at, what am I going to say? Does somebody know what we might be able to browse at? Does somebody know what we might be able to have a little browse at? Somebody, if they don't know, they're going to learn today. You're going to learn today. Is that a clue? Is that a clue? This is the Japanese yen currency index. All right. This looks peculiar. All right. This is, I'm in the seconds. All right. This is ultimately the Dixie for the Japanese yen. The Dixie is the dollar index. The Jixi is the Japanese index. Just like the Bixi, BXY, is for the Great British Pound index. All right. This is the actual index of just that currency, the actual movement of just that currency. Okay. And then we can analyze this, just like we can analyze the Dixie, and think to ourselves, what does it look like this market might do? Now, I'm telling you for free, my immediate eyes looks like this market might gain strength. Because I can just take a snapshot and see that the market was, watch, pushing down like this, in this kind of energy, and now it's decided to push up like this. Yeah? And if I was to do a little, just very, 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 very quick analysis, I haven't even looked on the larger time frame, but we're kind of near the bottom of this range, and maybe the market wants to push up to the, within that range. Maybe. Let's zoom out, see what's going on, because we can't just start where we land, which I was telling you guys not to do. All right? But we can see for some time that Japanese Yigi Yen was doing that and doing that. So based upon this now, we are in sell territory. We're in an area where that Japanese yen may continue to lose strength. Yeah, so even on a small, on a shorter time frame, we might see a little bit of strength, until we start to break some structure, some structure, some structure, some structure. And we can move this here also and say that the market was started to trade within a narrower range in here. Yeah, you can do that. But at the moment, we are at the top of the range, and I am a little bit concerned that the fact that that is sell territory. However, once again, that market, because we know markets move in waves, pushed up in here, made a retracement. Sorry, made a retracement, and then made a bearish impulse. And as we know the market move in waves, maybe this market wants to do that before doing that. Or maybe the market wants to do that and then start saying, oh, wow, Japanese index is gaining some strength because of the raise in interest rates, etc. I do not know. But at the moment, I'm looking at it on a smaller time frame, and the market has been making bullish energy. Breaking, look at the structure. This would have been some structure in here. And I am on a line chart because the candle's looking a bit funny. Broke that structure, indication, correction, continuation on a much larger time frame. It looks like it wants to potentially continue doing this. Where to? I can see some big reasons of why the market might want to come up here, in here. Maybe there's some reasons. Let me go to my candles. See that big, at the moment, the candles are representing that as a big gap. Can you see the candles as represent that as a big gap in the market? For whatever reason, TVC, that's how they're painting these candles. No problem. But that is a big reason that this market might push up in here. And if it pushes up in here, meaning the price is going from 68.50 to 68, 60, 70, 80, 90, that means that this Japanese yen is gaining strength. That means that our Euro JPY may because the Japanese yen is gaining strength. Euro's on one side, JPY is on the other side. And if it gets heavier, gain strength, we're just going to relate that to heaviness, to weight. Then that means that scale may be weighted like this. If we also combine that with possible fundamental things that are happening, like I said, what Brother Alan spoke to us about the other day in regards to interest, yeah, the interest rate, sorry, then maybe this might be the play that may happen. So on a smaller time frame, have a look. I'm coming here, my 50-minute time frame. Maybe we see a small retracement. Oh, sorry, let's go to maybe we've had our small retracement into this level here with this wick. Let me look at it on a 5-minute. So this was an indication below this structure over here. Boom, indication. Let me go to a larger time frame. This was an indication below this structure. This was the correction coming up to here in this level. And I want to zoom down my time frame if I want to see an entry up here for continuation. Or I'm going to be like Tam. I'm going to wait till we close below here. And then I might get a little entry as a close happens lovely just there. And my stop above either the, a safe high or a more aggressive high, depending on how it moves. All right. Just on the basis that we may be trying to get down to the bottom of this range. Also, when I do that, I want to look left and see at the bottom of this range how I've drawn it. Is there any kind of areas of structure where that market, might be reaching towards? All right, so let's have a look left on that blue line. Let's move this out of the way. On that blue line, let's see if there's any structure there which is significant that market might. Down near that blue line, we've got this huge bit of liquidity here. And we've got a place where this market has showed strength and speed of a push. But the market did come back down here and retest it already. So, like I said, maybe it might just pour and melt straight through that area. Maybe, because it already came, checked the battlefield once already. Doesn't mean it can't come and do it twice. But it has already come and checked the battlefield once where this market smashed through with strength and speed. So, my bias is that the way this market has accelerated down here is I'm going to be waiting to see if we get a breaker structure below so that I can continue selling this market as it accelerates down into these levels. Or maybe this was just a little push down here on a larger higher time frame liquidity, which I don't really think, all right? But maybe to just grab liquidity and the market might decide it wants to come all the way back up into this range and close this imbalance that we said is sitting out here forever. So even though I've given you both scenarios, because I don't know. I'm going to wait and I'm going to read and react to what the market does. Now, someone's saying, how do I just wait? We can just sit there with my mouth open. No, you're going to use your alerts. So right now, for argument's sake, all I have to do is set an alert above this level here, high, this little high on a smaller time frame. Add an alert crossing up. Okay, really I should add an alert crossing above this high. Yeah. And I'm going to add an alert crossing down below these levels, if it lets me. Add an alert crossing down. I'm going to make sure I've got my sound on. If you don't have your sound on, you're not by your computer, what you're going to do, have a look. I'm going to show you what you do. You're going to make sure that in your alert, you have your notifications on that can either show you in the app. If you've got the TradingView app on your phone, it's going to show you on a pop-up actually on this screen when it happens. It's going to send an email to you if you want. So you can set up your own email address, which is going to be your alerts, your trading alerts at gmail.com. All right. And it's going to play a sound if you have your sound on your computer. Yeah, you can even make it send email to SMS, which I don't really know how you do that. Click here for more information on that, blah, 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 blah. You can click there and you can set it up. So you get a text message. And that text message will say to you whatever you want. Have a look. Break-in, I don't know which one this is. I think this was the higher alert. Break-in above structure. And you can have some further information here. Blah, blah, blah. And then you can click save. So when you're minding your business and you're walking, you hear that alert and you see that email or that text come through, you know what it's for. Or if you're able to be in front of your computer, you hear your alert, you go and see what alert's ringing, and you can come and sit here and go, oh, no, look, Jay, it's actually broken above this structure. Like I said, the alert really should be this structure. All right? Why do I say that? Because look, on the 50-minute time frame, this is still in balance. The market could still decide to come all the way back up in here and close this little imbalance. We have got a wick up here, 50%, or maybe it wants to close it completely. So I'll move the alert to here and here. So I've got an alert here and here. If it closes down below here, cool. Maybe we're going to sell to the other end of the range. If it pushes up in here, when we're breaking outside of this little acceleration down in here, and then we might see that happen, this happen, trading back within the range that it was in before. I hope that makes sense for my breakdown, Tom. I hope I didn't lose you. I hope it makes sense. All right, I hope it does. Let's do another one quickly. Does somebody else want me to look at another pair real quickly or have any questions for me? Have any questions? And guys, let me tell you something. If you don't see something, like for example, there's not a problem if for the last couple of days you haven't taken a trade. For the last couple of days, some of the pairs I've been looking at have given me no trades. I did get in a gold trade that did very well because it gave me a small opportunity. But for a lot of other stuff, when we was looking at it, well, this GBP USD, for argument's sake, still doing hokey cokey, still in that little box here. Yeah. And if you don't want to trade in this fruff, then that means you haven't been able to trade GU. Yeah. That's not a problem. There's nothing wrong with that. That's part of the game. That's part of winning, is knowing not when to get into a bad situation. Yeah. It's not every event that you need to partake in. Some events you go, yeah, no, I don't want to go there. It's in what block? On what floor? The 21st floor of that block in South London. Yeah, I'll pass. You know what I'm saying? It's not a problem if you've been able to identify a better trade, that a trade you don't want to get involved in and say, look, I haven't taken a trade for the last 2-3 days. That's good. That's better than you telling me, say, yeah, I took 10 trades every single day. I've taken 30 trades. I'm like, all of those 30 trades couldn't have been good trades. So you're just a lunatic. You're just hitting the button. Okay? You're just hitting the button. And the same way with this, should have alerts in here, but maybe I've deleted them all. I can't sit here with my mouth open, waiting for something to happen, just staring at the screen. So I put my alerts. I make my alerts look for me. Yeah? Here's my alerts. They're looking for me now. Just like that, a couple clicks of the button. They are now looking for me, letting me know when I can get in here and I can take the monies out of the market. Yeah? Any questiones? Any questiones? Should we do one more? Let's go and have a look at Bitcoin. I haven't looked at Bitcoin for a little while. Yeah, I'm just going to put in some more lines because I feel as though I wiped this chart of all of my great analysis because I was doing teaching with you guys. All right. Okay, let's go look at Bitcoin real quick. BTC and USD. All right. Bitcoin is the thing. Everybody's trying to get their money to crypto. So what would I do with this? Just talk out loud. Anybody, I'll give you permission to just unmute yourself. Just talk all over what I'm doing. You know, what would you do? Anybody who's can. I know people at work or in the car, but what would you do? Let's go. You just opened Bitcoin. What do you want to do first? Anybody? As I'm doing it, what would you want to do? Not sure. Shy. Don't want to speak. Not listening. Anything's possible. Yeah.
Yeah, look for your highs and lows first and foremost. Look for gaps in the market, imbalances, and look for where liquidity is and where the draw on liquidity will be on the larger time frame, and then obviously go down as the Russian dolls to your different time frames. But yeah, look for also turning points, highlight those right there. Yeah, that's right, and so on and so forth.
Yeah, excellent. You know, he highlighted everything. You know, he did go lots of things, liquidity, imbalances, etc. One thing you have to do as well is, I don't want you guys, when you get to a market, feel as though you have to identify all of those things in like a big box. Understand there is a process, and the process, in my opinion, would be larger time frame, understanding the direction of the market. Yeah, slapping him some lines so that you can see the general energy of the market. All right. Seeing if there is some breaks of structure, okay, and then being able to identify imbalances, identify liquidity, all these things like that. Because you don't want to just, your chart just looks like an art attack, all right, with things everywhere that are not relevant. I go back and I have a big discussion about previous stuff because I'm teaching. Do you understand? And I can't teach you about what's going to happen now to the future. There's no data there. I can say, oh, yeah, right now, the market's going to come up here, close this imbalance, and you can see that. I can't say that about now. Do you understand what I'm saying? Because it hasn't happened yet. So sometimes you see me go back and show you what happened here, boom, boom, boom. If it happened here and it happened 20 times in the past, why should it change when you decide to look at the charts? That's why, you know, I teach in the way I do. But yeah, let's go and have a look at this Bitcoin. We've seen Bitcoin actually break outside of this range. It actually accelerated when all of the commotion and excitement that people was having that Bitcoin was back at this orange range that you see here. The market actually pushed outside of it. And if I was drawing my little lines in here, I'd have to touch this one kind of underneath here. This wick is a bit of a concern to me. I don't like this wick. All right, but either way, we've seen it break that wick structure here. Indication of what it might want to do. Corrected. Where did it correct to? Is there any concerns that we can see that the market might have corrected into? But I can see this imbalance in here on this time frame, which is the daily, where the market came and it tapped into this imbalance. Maybe it's not finished. Maybe it wants to push up in here further some more. I don't know. Yeah, let's go to my 4-hour time frame over here. See what's going on a 4-hour. On a 4-hour, if I was drawing some lines now, I'd have to draw that line like this. All right, touching that last low before that highest point, which is here, because that gives me structure. Yeah, structure. The market's trading within that range. I can see the concerns over here, the imbalances. So if I wanted to be a bit more specific, I could draw them in here as this is a 4-hour imbalance. And there's a little tiny 4-hour imbalance still in here that the market hasn't closed. And there's some liquidity. Oops. Like Alan says, these are the things we look out for. There's some liquidity sitting above all of these little equal highs. As I can see on a smaller time frame, this is consolidation. Yeah, you can't see it here, but have a look. It's pretty clear now. On a smaller time frame, this market over here was like making these equal highs. It's kind of in here at one point. Yeah, it was in here at one point till it indicated, corrected, and continued. Then came up here and did more consolidation again. Then indicated, corrected, continued out of it, pushed down to here, closed the imbalance, sitting over here. See it? Came down into that imbalance, and then made a decision again to break structure and start pushing up in this direction, where now we're back at the top of this level here, where if I was to draw a line going across, there evidently will be liquidity above these levels. Yeah, so the market's pushed down here now, broken structure. Has come out of liquidity, said, I'm not ready to take it now. There's more bearish sellish pressure in the market. All right. And it came and broke this structure here, made a correction, made a continuation. Now it's doing the hokey cokey. So for me personally, if I was looking at Bitcoin in here, I want to see what it does outside of this little kind of scribbly range. Okay. But it has not broken this larger structure yet. So the market is still bullish. The market is still bullish within this hour time frame, making higher highs, higher lows, higher highs. This is still a higher low until it breaks this level. Yeah, so if I was to put a line going all the way across, until it breaks like these levels in here, this is still a higher low. And for all purposes, if the market decides that it wants to consolidate at that point, well then yeah, we might see it from here, travel back in here and do this. Or we might see it from here, push up here and close up some of them reasons, imbalances that it might want to come into here. So at the moment, what I'd be doing, personally, if I wanted to trade Bitcoin, not invest in Bitcoin, trade it for the short-term movements, I'd be watching it and seeing what the market does. So right now in the 1 hour time frame, we've got lower low, maybe equal high over here. Then we made a lower low. We haven't broken this structure as yet. I'll be watching this keenly. I'll be putting in my lines at the moment, which currently have to be like this, touching the last high before that lowest point of that impulse. And I'll be seeing whether or not this market is going to come and break this structure here, or it's going to push down and start trying to break this structure and ultimately where this blue line is. If I drop my time frame down to a 50-minute time frame, I would not be getting involved in this freth. Yeah, so I'll be waiting once again patiently to see what happens. And maybe what happens is going to be dictated by news or some other sort of things that are going on in the market. Hey, look, we've got news in 9 minutes in the GBP USD. I'm going to stay on the call to see whether or not this S&P Global CIPS manufacturing PMI news has an effect on the markets, so we can all watch it together. It's only in 9 minutes, and then we'll finish up the session. But yeah, so we're only gone over a little bit. All right. So this is basically saying that they believe, and if you don't know what this is, you're like, what the hell? If you're at home right now watching this on YouTube, and you're like, what the hell is, and you're interested, is S&P Global CIPS manufacturing PMI Jan? What is that? You just click it. You ask Bobby Google. You ask Google. Ask the internet, and the internet will tell you what this is. Okay. Which it doesn't. Yeah. Normally it has some blurb up here telling you exactly what it is. Okay. It does tell you here, that a higher than expected figure should be seen as positive, bullish, but it doesn't actually give you information about what that is. Okay. Which it normally does. So it let me down today. All right. But ask Bobby Google. All right. Mr. Bobby Google here will know. Yeah. There it is. It's the consensus for the next United Kingdom. What is the PMI services? It's just repeating information going around and around in circles. You can go and find out if you want to. You can go and find out what that is. All right. You can find out. You can, like, somebody's really interested in fundamentals can go and read this information if you wanted to. All right. So there you go. All right. Don't be scared of education. Don't be scared of learning something new. All right. But yeah, this is happening in 7 minutes. So I'm going to go to a GBP pair. All right. So we can look at GBP USD, but I'm also going to look at GJ. I'm going to split the screen and I'm going to drop to a small time frame. Okay. Because I'm not, I don't necessarily think this news is going to shift the market on this axis. Okay. So I'm going to put GU over here, and I'm going to put GJ over here, all from Oanda. So I've at least got that consistency that the candles are printing in a similar way because they're all coming from the same source. Okay. I'm going to drop this time frame down here to, let's just go and look at our 1 minute time frame. Would have been good if we broke down the whole structure first for GJ, which I don't probably have enough time to do now. And 1 minute over here. All right, so I can see in GU, I really should have broke it down. And I've got 5 minutes to see if I can go in my 5 minutes. I can get some whereabouts of what I think may happen. Well, we're trading within this city range. You know, overall, I want to sell this market. We went and we tapped all the way up into the golden zone. I'm remembering what we were saying. And I'd really like to see this market break outside of this yellow box. But if there is more GBP news, which the market may wait for that news before it does anything. At the moment, we've seen this bearish impulse coming down here, breaking below some minor little levels in here. We're currently here. You know, maybe we might see an impulse bullish. Let's have a look at this. Break structure, make an indication, correction, continue. Might see a push down here to grab this liquidity, and maybe a push in the opposite direction. But either way, let's see what the time's saying. Got about 5 minutes, I believe. And this is just to show you. I'm not trading it. I'm not saying hit the button. This is just for us to see the effect or nothing might happen, all right, of red folder news on trading, all right? And I just thought let's have a look at it as we've only got a few minutes before it triggers, all right? Maybe within those 5 minutes, I'll quickly break down GJ, which should be pretty similar to EJ, okay? Shouldn't be a completely different to EJ. And we can see, if we go all the way out to our monthly, it's kind of ugly. It's kind of ugly on the monthly. I'm gonna just put in some lines here. So I want to know where this high is over here, first and foremost, all the way over here, this high. I also want to put in some lines real quickly. Got about 4 minutes, 3 minutes, okay? I'd like to do this to understand the market was trading within this kind of energy. We did accelerate like so, touching the last little point here. I'm doing that also. I'm going to drop my time frame down to my daily to understand what's happening. The market came up here. Got a bit ugly, making some kind of sideways action in here, some kind of consolidation in a big way, kind of consolidating in this little area like so. It's not really definitive what it wants to do. Drop my time frame down to my 4 hour. We've gone to the top of that range, understanding that at the top of any range, the market we want to sell. At the bottom of that range, we're interested in buying. All right, so we can see this impulse here happening. And when it got to the top of that little range here, it started to go sideways and do the hokey cokey. And we've seen a bearish break out of our consolidation, our indication, and our correction that happened out of here. I can actually see the indication and correction straight away, which is great. Yeah, indication, correction, continuation. You know, personally, I'm thinking to myself that we may see this great British pound lose some initial strength, maybe to push below these levels. Yeah, maybe that's its target. That's where it's going to. But let me go on a 1 hour. We'll see. On a 1 hour time frame, we are at the bottom of this range. If I do this, we pushed out of this range a piece. We accelerated. And when we've got 2 minutes maybe left before that news comes out, and maybe nothing will happen with the news. All right, maybe nothing will happen, and we can see some liquidity underneath these levels. Okay, no problem. We've got about 1.5 minutes left. You can see that this market at the moment on this side, that's an hour. Let's get down smaller than that, because I was not small enough to see the reaction of the news. We're at the top of a range. Maybe we're making a little bit of retracement, closing some imbalance. It'd be interesting to see this market if it closes below this level here. Let's add an alert. crossing down, boom. So maybe we'll see a little push up in here. Maybe the news will make this come down here, break some structure. I've got an alert in here. I'll also place an alert up here. We've got about a minute left. And what I'm going to do is I'm going to grab you and I'm going to put you over here. And I'm going to grab our two pairs like this. And it would have been better if I split them the other way. Let's just drag that this way. All right. We've got 1 minute. And this is see if it has any effect. I'm going to drop this time frame down all the way down here to our, let's just say 2 minute time frame. And we're going to drag it over here. This also on our 2 minute time frame. And see what happens. And I'm going to make it clear, I'm not trading this. If I did break it down before, I would, possibly, if I could see something, but we're just seeing how this news that's coming out in 34 seconds, is it have any impact on our markets? And if it doesn't, cool, because there is other news coming out today. GBP news, see this, at 12 o'clock. So let's see. Let's see if the market has any bearing on what may happen, or it's just going to wait, because there is quite a lot of news actually coming out later, which I didn't realize. Let's see. 4 seconds. The previous was 46.2. The consensus was 46.9. It's loading here. Let's see if if anything happens. Maybe I should refresh this page, maybe. Watching. Watching. Yeah. The consensus was 46.9. It came out at 47. So, when we see something like here, it's come out here. When we see something like that happen, and we don't see anything radical happen, you've got to assume, that most of this data or this news is priced into the markets. What does that mean? That means that there is a whole room of guys with magnificently thick glasses that know that PMI or data is coming out at this time, and they have already done the maths from a fundamental perspective, from some real analysis of what they think is going to happen in the market. And they've already priced in, they've already placed their orders, they've already bought what they needed to buy, they're already well positioned. So therefore, you may not see huge reactions in the market, all right? But what I will say is this, guys, looks active today. I think Alan just fell off the call. Let me see. Yeah, he did. But it's active today, all right? We can see red folder news here, red folder news USD. We've got red folder news USD all happening around 3 o'clock, 1:30. So understand that there will be some volatility in the market. But we've seen here this market push up into this level. I personally think maybe it's going to tap into an area and start getting bearish. But we shall see in this GJ especially. But we shall see. Hasn't got a full dose of analysis, but maybe we'll push up into here and then continue a little bearish push. All right. Guys, any questions? Any questiones? If there is no questiones, I'd like to wish you guys an absolutely fantastic morning. Yeah. That's me, banked another bit of education and those 10,000 hours, banked some more in regards to our trading. And every single day, guys, is another little step forward in your own development. Even if you're not in front of your charts and you're just listening and it's just passive, yeah? Even if you are in front of your charts, but you're not quite getting it, every single time you pop up on a Breakfast Club, you're edging towards getting to where you want to be. You're not going to be edging towards it if you're sleeping or if you're watching breakfast TV. So therefore, if this is something that you want to learn, it is something that you want to do, just keep showing up. Keep showing up, all right, is part of the strategy. Keep showing up, all right? But good morning, God bless. I'm going to play this morning. I'm looking for something educational, but sometimes it's informative. Sometimes it's just fun. Sometimes it's controversial that we can have a conversation about it. This here is someone called Pinule, the Black Pen, in conversation with Joshua Maponga. He's given a warning to colonial beneficiaries. It's interesting. But before we go there, I'm just looking. There's Andrew Tate versus the Therapist. I don't know if anyone's interested in Andrew Tate. I think what we're going to do, I'm going to play something completely different. All right, we're going to watch What They Never Told You About the Death of Bob Marley. All right, What They Never Told You About the Death of Bob Marley. And it looks interesting to me. I haven't watched it before. I don't know, but I want to know. So I'm going to play, it's only short.
This
so we're going to watch that. And
is
we'll watch
Floyd,
some more.
and he is now able to make anything up.
Shut up. We'll watch some more educational bits and pieces, maybe some trading bits and pieces, maybe some health bits and pieces throughout the day. But guys, good morning. God bless. Thank you for being here. Hopefully you learned something and you're going to apply it on your charts today. I had somebody yesterday contact me and it was like, "Oh, Jay, you make it look so easy in your videos, but you know, I'm trying to get it, but I keep making silly mistakes." I said, "Keep watching the videos, bro." I said, "Keep watching the videos." Because I don't think I explain this in a complicated way. I just think it takes time for you to get into the rhythm of what it is that I'm doing. Okay? Of what it is that I'm doing. And I'm telling you, we're all going to cry. I can't wait. Oh, I've been muted. I was just saying that I can't wait till we get to the point when we've all, a few years from now, we've all quit our jobs. We're all, standing around our shiny cars, okay, and saying that because of the time that we dedicated to this skill, we was able to change the narrative for our families. All right. But this is the shit shoveling stage. This is the hard work stage. This is the graft. Yeah. The accolades and the glory comes afterwards. All right. So guys, let me put this on here. Wish you guys a great morning. I don't know what just happened to everything where it just cut out, but that should be better. Good morning. God bless. Have a great morning, guys.